Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market. So not surprising, we saw a weak day today, and actually to start the morning, very surprised that the bulls held up as well as they did. It was a fairly clear setup in order to be looking bearish if you looked at the hourly time frame, and we'll check that out in just a moment. But not surprising, bearish reaction to Apple. That was all the headlines and all the stories. Closed near the low of the day, and we're looking for further pullback. We're clearly in daily consolidation now. We have our low of the dump. We got our high of the bounce, which was certainly sped up a little bit by that bearish action after hours yesterday. And now we're looking for our higher low to form compared to 233.76. If we were to see increasing bear volume tomorrow and another red day, the odds would increase that we could just drop straight down to a lower low. If we see declining volume in a fairly tight range, then we're going to be looking for this tightening range of the higher low and then tightening range into next week. So volume's going to be telling for me as to whether or not what the odds are of continuation to the downside without trading sideways within this range for a bit. So the hourly time frame this morning, and what I mean by an easy direction to be looking for, is we had the bounce overnight. We had a deal, and the exact companies are the biotech companies. There was a deal and a buyout, and the exact companies are slipping my head at the moment. In a bit of a rush right now, but we're looking at the lower high on the hourly. So the bounce pre-market took place. We bounced for 3 hours. And heading into the morning, we know an hourly lower high is going to form. The odds that the market just completely turns around and sees a huge recovery to a higher high, breaking over the highs of the previous double top, not going to happen. So we were looking for an hourly lower high. We started to pull back. And then, of course, the bears took over when we dropped down to lower high on the hourly, lower low, and then weakness into the end of the day. So the bears clearly have momentum in their favor. Again, there's a lack of support where we currently stand. If we look at the 4-hour time frame, the last little support level was down at 238.96. So after the low of today, that's the next level that we are looking at. And the bears currently have complete control. Any bounce on the hourly that is under 248.18 is just an hourly lower high. So we're not expecting a whole lot of the bulls. Even if they bounce tomorrow morning, again, we'll just anticipate that it's going to be a lower high on the hourly time frame. So Apple is the story. Apple closed at the low of the day, similar to SPY. And in my opinion, you know, whether you're looking for day trades or long-term positions in Apple, just wait for SPY to give us some signal of strength. If SPY is going to roll over and break that recent dump low under the 230s, then Apple's going to get uglier, and Apple can definitely get uglier. The weekly time frame is very extended, absolutely. It's oversold. We know there's going to be a weekly bounce sooner rather than later, but in my opinion, it's not going to happen without SPY seeing a weekly bounce as well. And again, if this is a bear flag on the weekly for SPY, Apple's going to get uglier in my opinion. So I did flip Apple today just for a quick day trade, small gains, but I was noticing as I was watching, you know, the Apple bulls would show up and start to shift that momentum on the 5-minute time frame a little bit, and then SPY would see weakness and completely erase that. So obviously the correlation is still there, where even if Apple bulls start to buy some of the dip, if SPY is going to be weak, the Apple bulls are not going to get very far. So if we're looking at resistance on Apple, we've got 145.72. Anything under that's just a lower high. And as far as support goes, we're looking at 142 psychological, and the next support level after that, looking at the weekly time frame, going to be down at 140.06. So bears still in complete control here as well. Daily and weekly RSI both under 30 right now. Oil today had a nice recovery, and it was another scenario. This is why we could be confident that we were going to see SPY set an hourly lower high, is because heading into the open this morning, oil was extremely extended as well. So oil had a 6-hour bounce heading into the open, and we knew that the most likely scenario for oil is a lower high compared to 47.75 and a tightening equilibrium. And of course, the fact that SPY was extended on a 3-hour bull move told us that we were looking for oil and the market to pull back from an hourly lower high this morning. We then had an hourly higher low, and now another potential lower high being set. So the range is tightening here on oil. If we look at it on the 4-hour time frame, a little bit more condensed, and we're looking for a higher low to be formed now If we see a bear break of 46.66 into tomorrow morning, we're going to be looking at a higher low compared to 45.69 and a continued tightening range. So this is one to be watching. There could be an oil trade tomorrow if this tightening hourly pattern gives us a break. But the daily time frame for oil is still continuing this bounce. So we got the bull break 2 days ago, inside bar today, which is this candlestick, and now we're starting a new candlestick still in this tightening range. And the tightening range is likely to break here on Friday. Inventory report for both natural gas and oil due to the holiday is tomorrow. So those are worth watching as well. Natural gas, still no sign of a bounce. Bears still in full control. I am interested in this bounce in natural gas, but I'm not going to try and time this bottom. 4-hour trend is my friend, and lower highs and lower lows. We saw a quick bull move up. We broke some resistance levels. We got no follow through from that. Just lower highs and lower lows continuing. What I will be watching into tomorrow is, can the bulls form a higher low compared to 2906 and see an equilibrium here as well on the hourly? We're watching the oil hourly equilibrium. Let's see if we get a natural gas hourly equilibrium. Another factor is the inventory report. If we have a weak day tomorrow and we get the inventory report reaction and it's initially a quick flush down, that will have us in extended RSI levels. On the daily will be oversold, the 4-hour will be oversold. So I might look to buy into that, final push down, but it would have to get pretty extreme. The reason that I'm not scaling in or trying to find the bottom like we did with SPY, might have explained this in the last video, but SPY dumped on the daily chart. So we were comfortable scaling in because it was all one move straight off a cliff. It's more extended to the downside. The bears tire themselves out. Whereas here on natural gas, every little stair step is the bears taking a breather and then having more follow through. It keeps the RSI levels from getting extreme. So this stair step pattern down is much less interesting for me looking to play a bounce than just a straight up dump is. My aggressiveness for playing bounces matches the bears. The more aggressive the bears are pushing it straight down, the more aggressive I will be looking to play that bounce, but not when it's stair stepping down like this. QQQ, very similar to SPY, closing at the low of the day, just looking at correlations between tech sector and financial sector. So SPY and the tech sector are the same, but it is noteworthy that the financial sector held up a little bit better. And that's not surprising, just the case that, Apple is going to take down the tech sector more significantly. It's an inside bar on the financial sector, but if we break 2340, a lack of support nearby, and that's going to be a key support level to be watching first thing tomorrow. If XLF breaks 2340, the odds that SPY sees further daily consolidation is going to increase. And last, we'll wrap it up with VIX. VIX gave us a daily inside bar, so we're not confident that the daily higher low has been established yet. We need a bull break tomorrow of 2660 in order to see some follow through, and then we'll be very clear that 2305 is our daily higher low, and we'll look for a lower high to be set, perhaps around the $30 mark. But we have to break that tightening pattern first. It's an equilibrium on the hourly. Lots of hourly equilibriums to be watching into tomorrow. Oil, potentially natural gas, VIX here, and SPY almost had that hourly equilibrium, but it did break bearish into the end of the day. So that's where we stand. So I'm going to be watching natural gas hourly equilibrium potential, keeping in mind that the inventory report is coming. Same thing for US oil on the hourly time frame with that inventory report coming. And XLF is going to be key for me. 2340, if that level can hold, perhaps SPY bulls get a little bit of upside tomorrow morning. Hope you have a good night, and we'll see you over the weekend.
Lower high, higher low, low high, higher low, 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 lower high, higher low, low high, higher low.
Bitcoin's breaking out.